those views. Rajesh Kothari is Managing Director at Alpha Accurate Advisors. He's joining us now. Rajesh, good to have you with us here. Thank you very much. If you have a view on all these changes in the finance amendment, do tell us. Market continues to correct a little bit. I'm assuming there's a bit of global pressure, no real motivation locally with these changes, at least today, near term. But more importantly, I was looking at your portfolio, and you own Muthoot Finance in your portfolio stocks. Just a complete slam dunk, down to 950 now. Lately we've been speaking with the management of Muthoot Finance. Last two interactions spread over the last month and a half have been a little more positive. They're saying, basically the last time they were on a few days ago, they said that FY24 AUM growth should be back to 15%. They seem to be on a bit of a mend. Would you hold on, be patient here? What's your sense?
Well, basically, this is the new addition in our portfolio in a very recent time. And it has been said when, others are greedy, you have to be fearful. And when others are fearful, you have to be little greedy. This is the company which we are talking about, which is number one into gold financing business, undisputed market leader from generations. They know how to do this business without NPA. They also know how to do this business with a very efficient operations. That's something very important in gold finance business. And of course, with the RBI approval to expand the number of branches, the growth from FY24, in our view, is going to be much better compared to what we have seen in last 2 years or so. So, this is a company with gold standards in terms of asset quality and in terms of the business practices and in terms of management. And that's why this has been a recent addition in our portfolio, across our plans. Kindly please put a disclaimer because we are holding this for our clients in PMS.
Rajesh, hi, good afternoon. Your thoughts on both mutual funds, the listed ones, asset managers, as well as insurance companies? Now we have clarity and the hits are pretty clear.
Well, currently we do not own, any asset management company in our portfolio. We own one of the insurance company, one of the large insurance company in our portfolio. And I think, there, of course, everybody got that shock on the day of budget, but the prices and valuations have already corrected. And we hope that, the opportunity remains big. The only thing is from structural perspective, in India, the problem in India is that everything gets sold because of fear, because there is a taxation, because there is a fear, therefore people take insurance. So the question is in the long term, can there be a structural PE rating? Because now we are not going to be able to do it because of the new regulations in place. And that's basically what puts a little bit question mark in terms of what valuation these companies will now command. So we have very small exposure, probably less than 2% in our portfolio. We are wait and watch mode kind of thing. But I think there are better places within banking and finance apart from insurance and asset management. And that's where most of our portfolio in banking and finance we are positioned for.
Rajesh, any other recent additions in your portfolio or any other stocks where you topped up your positions in the last 2 weeks?
Well, it is we keep doing it as and when it is required. I would not like to make stock specific comments, but three themes on which we remain positive. One is the capital goods, the capex story, that the growth drivers are increasing every day. The pace of growth is accelerating, whether you're talking about data center, whether you talk about smart grid, whether you talk about automation. I think there is a lot of traction over there. If you look at last 6-7 years, the central capex has been almost double digit. And now we expect private sector also capex to start probably by 2Q or 3Q. So capex story is one story which we continue to like. Second story, what we like is consumer discretionary. And if you look at our AAA budding beast, our mid and small cap portfolio, we hold almost 19-20% into consumer discretionary. And then we own a number of segments like luggage and consumer durable and appliances and so on and so forth. That's another space which we continue to like. And third space is, of course, banking and finance, because we believe that non-food credit growth has been very strong, double digit. And from here on, we expect even net interest margin to remain strong at least for next 2-3 quarters. Asset quality is under control. The credit cost is under control. And therefore, even banking and finance is expected to do reasonably well from current levels.
All right. Hi, Rajesh. Talking about luggage industry, I think you all own Safari. That was one of the companies. And the management sounded extremely optimistic when they spoke to me earlier this week as well. Before we let you go, Rajesh, could you tell us what are the cash levels you're sitting on? Are you deploying, or are you still waiting by that maybe you get a deeper correction? Because most of the commentary now seems to suggest that there's no reason for the markets to move up. But there'll be plenty of stocks out there that are offering value. Your take?
Absolutely, Nigel, you are completely, 100% right that there are a number of opportunities we see. After a long time, the valuation, the entry point, the margin of safety is in your favor. We are at really good attractive levels. At times it looks boring, but that's what makes you money more rather than every day up plus minus 5%. Actually, that doesn't take you long. So I think it's a very good market from valuation perspective. If you look at last 18 months, there is a time correction. And if you look at the price correction is from 19,000 to 17,000. So 10% price correction, 18 months of time correction, it means again another 10% discount. During the same time, the earnings growth has been up 25%. So you put that, so total discount is 45%. Put it in another way, if you look at market cap to GDP, we are at 95% compared to peak of 115%. If you look at the GDP growth of the country from September 21 to March 23, GDP is up 25%. So whatever way you want to slice and dice, there is no doubt that valuations are in your favor. And probably the worst is going to get over. The volatility may continue. You cannot time the peak and trough. It's very, very difficult to time the exit market. But I think from current level, there is a reasonable good probability of making decent returns with a 3 to 5 years time horizon.
All right, Rajesh, that point is well taken. It's just the near term that we have to get through, and that's been the really volatile period. Thank you for joining in today. You have a good weekend, and we look forward to our next conversation. Well, let's dial